Hey everyone, I'm Charting Man Dan with the Chart Guys. In this video, we're going to be going over a bunch of stocks and sectors and long-term patterns. We're going to look at the monthly chart, 3-month charts, and even some yearly charts as we check in with where we stand. Certainly a lot of euphoria going around in the market in 2024. So I've been doing a handful of these videos over the last couple of years, and if you Google Chart Guys long term, you'll see a bunch of them come up, and there's been a bunch of long-term patterns we've been watching along the way, and most of them have played out and followed through since our last check-in. A couple more. First one is Jets. This is a 3-month equilibrium ever since the CVID dump. We tightened up, we got real tight, and then we got the bull break. Bull break was at 21.38. We ended up going about 20%, maybe 18% at this point, but just a beautiful tightening range. The scales doing this between supply and demand, and then we get to the point where the bulls win, demand exceeds supply. This was not an easy one to enter. You really needed to be looking to enter into support, and there's multiple ways to trade equilibriums. I personally prefer to trade within the equilibrium, playing off of support and resistance. You could play the break, but in this example, look at the weekly chart on Jets. This was just straight up, no chance. I was paying attention right here, but I knew I wasn't going to buy this bull break because at that point we had gone straight up for 2 months in a row. We were up, 35% with zero weekly consolidation. And granted, it would have worked out, but that is not a good risk reward setup in my style of trading. So this was one that I just had to watch because it didn't give me an ideal entry, but it was a beautiful equilibrium that broke bull. Another one was Tesla on the 3-month time frame. Again, just a forever equilibrium. You run thousands of percent, you pull back 70% or whatever, you just got an equilibrium. We had a 3-month tightening range, and I did end up getting the bull move here, have a swing position right now, and if the broader market stays strong, I'm looking for all-time highs. But this was one where we had the election bull move that led to the bull break of 300. And we had a nice back test. Didn't quite get to 300, but trying to see continuation here and really just looking back towards all-time highs as the next major resistance level at this point. As I've said multiple times, if you're following along on Twitter and other places, I believe a blow-off top is coming in the broader market. I'm not going to talk about a blow-off top in this video. I'm going to do a webinar designated specifically for it in December. I'm not trying to nail the tops. I'm just trying to get everybody prepared for what I think will be a fast, hard shift from the massive euphoria that we're seeing very quickly into fear. That said, I'm still long, and I'm still buying dips, and I'm still trading with the trend until I see signs that it's clearly shaping up. So just know that that's a backdrop opinion of mine as we're going over these longer-term charts, but the bulls still have complete control. And I've been personally loving the 3-month time frame, which is something I only started using 2 years ago. And again, it was during the bear market where we had the S&P 500 and the NASDAQ pulling back, and I used the 3-month time frame to help prepare me to look long and ended up making that switch to being back to Team Bull May 2023, and I've been there ever since. And CCJ, here's a perfect example. So CCJ, uranium name, blue sky breakout. This actually was a previous one where this was in our patterns because we were watching this monthly equilibrium. This was in one of our videos. And again, we got the bull break and it just was perfection. Tightening range, scales balancing, demand exceeds supply, breakout all-time highs, and follow through. Find those long-term tightening ranges and play the breaks because they generally have long-term follow through. That's not what I wanted to talk about. I want to talk about the 3-month time frame here because if you're looking at this daily chart and you're looking at this right here, you say, okay, April, May 2023, nice big bull move, 100% move. Oh man, looks like a top's in. We're weakening significantly. Look at this drawdown. We just fell off a cliff after running slow and steady strong, 37% drop in a matter of 2 months, 37% drop. Man, that top's got to be in. Normally, I don't see anything bullish about this daily chart whatsoever, but I knew to go to the 3-month time frame. And so here's an example of a tweet where I was saying CCJ had 9 3-month candle stair steps in a row. So that means a higher low every single candle, 9 in a row, 27 months. That's not sustainable. We have to see consolidation. No red flags to the longer term structure for me if EMA 12 is support. Why? Because we held it. This was when that monthly equilibrium was forming. It's been holding, holding, holding. Yes, big drop, but we know a higher low is the most likely scenario. We formed that higher low, and now here we are back at new all-time highs. So again, daily chart, I don't see anything bullish about it whatsoever. 3-month chart, I don't see anything bearish about it whatsoever. And so it's very important to look at all those different perspectives for the bigger picture. So just a new longer term support, 35.43 on CCJ, and we'll see how much follow through the bulls can get in blue sky. So again, back to the 3-month SPY and QQQ. Here is the 3-month time frame. And again, you show me this chart and you don't tell me what time frame it is. You say, is there anything bearish about this chart? I say absolutely not even close. And, granted, this is a bear market by the definition. I don't like the definition of a bear market. For me, that's not a bear market. Yes, it was a pullback. Yes, the bears had full control, but it's extremely healthy on the 3-month time frame. I mean, we didn't even get back half of this monster shot on the CVID moonshot recovery. So yes, it met the definition of a bear market, but I don't call that a bear market. You want to see a bear market? I've never seen a bear market in my life, as far as I'm concerned. I started trading 2010. And so even 2008, it was just a straight drop into a V-shaped bounce. If you want to talk about a real bear market, give me the first confirmed 3-month downtrend in decades. What would that look like? You pull back, bulls say, oh, we're going to recover. It's okay. The dip's being bought again. You confirm a 3-month downtrend. That gives you a bear market for years. That tells you we're not going to hit an all-time high for multiple years. And I'm watching for that to happen in my lifetime sooner rather than later. But again, this 3-month chart, there's absolutely nothing bearish at this point. And again, the NASDAQ's the exact same thing. A little bit deeper retracement, but just back in full control. So let's now zoom in monthly time frame and look for a guide here. All right, SPY, blue sky breakout. Again, I know I'm not trying to nail a top. I know that trying to nail a top and blue sky breakout is a fool's game. Yes, things can be extended for a very long period of time, but I want to find some guides. So QQQ monthly. All right, every pullback that we've seen since we convincingly turned back to Team Bull. So there's 2022 Team Bear. And then, okay, looks like we might be getting out of it. Okay, all right, bulls are back in control. Ever since that point, higher low off EMA 12, didn't even touch it. Higher low off EMA 12. So that's my guide. I know nothing changes about this longer term market structure if monthly EMA 12 is support. When we lose it, I know things are shifting. Bigger picture. And one thing you don't want to find yourself doing is, once we are putting in potentially a longer term top, you don't want to just keep zooming out and say, well, I'm long, but we lost 1 month EMA 12, but we're just going to look for a 3-month higher low. So I'll be okay. And then if we, pull back even, well, I'm just going to look for a 12-month higher low. You can always find a time frame where you're going to look for the higher low on the long term. But next thing you know, we're down 40%. And obviously we don't want to sit through a 40% drawdown just making excuses. So losing monthly EMA 12 on the NASDAQ for the first time in at least a year and a half, potentially 2+ years, depending on when it happens next, is going to stand out to me as this may be a longer term top. And so I will use that information and act accordingly. But bulls have absolutely nothing to worry about if monthly EMA 12 is support. So that is my guide here. I would call that, I guess, a short-term, long-term perspective using the monthly chart. So that's where I stand on SPY and QQQ. SPY, we have this we closed right on it. It's not quite as clear as QQQ, but same concept. Watching that monthly EMA 12. Bigger picture. So again, we always want to use longer term time frames and then zoom in. I want to determine what's the most likely scenario on a longer term time frame, zoom into a shorter term time frame and see if there's a pattern shaping up that is going to confirm what I feel is the most likely longer term. For example, if I'm looking for a daily higher low on a breakout stock that's consolidating, and I see an hourly falling wedge, then that increases probabilities that a daily high or low is shaping up. It's a shorter term bullish pattern within a longer term trend. I look at XLV yearly chart. Every candle is 1 year here. This is a stair step for 15 years in a row, aside from a little CVID lower wick. This chart is going to see yearly multiple years of pullback. Am I going to nail the top? No, but I know it's inevitable. And when you look at a chart like this, you say, consolidation is inevitable. We will not be surprised in the slightest when it happens because it's extremely overdue. Then I say, okay, we got a month left in the year. This is the most bearish yearly candle that we have seen in 15 years. If it were to close here, things can change in the next 5 weeks. So it's not set in stone, but if it were to close right here, that is the most bearish yearly candle. Why is it the most bearish? Well, because we have so many of them closing at the high of the candle. Absolutely nothing bearish about any of these. These have lower wicks closing near the high of the candle. If anything, you could say, man, maybe that. There's an upper wick there, but it never confirmed. So, okay, let's take that premise. Yearly consolidation, loss of the higher low every year candle. What would that look like if that's going to shape up? I zoom in, monthly time frame. Okay, do I see anything bearish about this chart? Well, we have a very clear wall of resistance that is now acting as support. This was a beautiful back test and hold by the bulls. What stands out to me? Well, that might be a monthly head and shoulders. If we're going to get yearly consolidation, it will likely be a monthly head and shoulders where maybe we get, a push up first thing to start the year. But if we roll over and then break this previous support, previous resistance, now support, then your yearly consolidation is underway. So I now know that I am scouting XLV for potential monthly head and shoulders for the potential of yearly consolidation. And when I'm on this long-term time frame, I have to remind myself, that head and shoulders could take 4 more months before it shapes up. We have to find a base and a higher low. The bulls are trying to put it in. We have to then set a lower high after a candle or two, and then we have to roll over for a candle or two. But this is something to be keeping an eye on, bigger picture. And this is the third most important sector in the S&P 500 by weight of sector holdings. So I'm paying attention to that potential pattern. None of those other charts, 12-month time frame, are that extended. I mean, they're extended, but they're not that much of a stair step. There's been multiple, SPY had a couple breaks. QQQ had a couple breaks. Well, only one, really. CVID. But you get my point. XLV is due for yearly consolidation, and there's a big upper wick on this yearly candle. In euphoria. I mean, you can't have more euphoria than what we're seeing right now, and that's what the yearly candle looks like. Semiconductors. So we know semiconductors led this euphoria phase coming out of the 2022 bear and going up the entire sector 180%, 200%. But what's happening now? Rotation. The star of the show is no longer the star of the show. They got old and they were no longer the sexy headline. So what do we have here? We have a tightening range where essentially nothing has happened for 4 months, almost 5 months. This is the price to close July and to close August and to close September, pretty much to close October. And here we are, look at how close these closes are 5 months in a row. Nothing's going on here. So we have our high, low. I'm scouting a monthly lower high as the most likely scenario and expecting that we're just going to tighten up while this move is digested. Now, what would it take for that to happen? A monthly lower high. All right, let's zoom in. All right, I got a base of support here. You can keep an eye on SMH, this base that the bulls are defending. But what's the most important? We know NVDA, most important stock in SMH. So if SMH is going to set a monthly lower high, and NVDA just hit all-time highs on the earnings reaction a couple days ago, so clearly NVDA has relative strength because SMH did not get close to all-time highs. So the lead bull of the sector has to weaken if this sector is going to set a monthly lower high. So what? I then pull up NVDA. Well, spoiler alert. I then look at the chart. Is there anything bearish about this chart? What flashes at my face is this is a rising wedge. Bull break straight into consolidation. Bull break straight into consolidation. Granted, it's just a daily time frame, but this is a daily rising wedge. If this breaks bear and confirms, which we're going to find out in a week or two, maybe next week, if this breaks bear and confirms, SMH will officially set the monthly lower high. And then NVDA, we're going to zoom out and watch for a monthly higher low, because again, it looks very different than SMH. SMH is doing this, while NVDA clearly got the higher high, but we're going to look for monthly consolidation. And again, just as far as blow off tops, here's NVDA going straight up. As you know, 1,000% plus. We will see NVDA 3-month consolidation. It will pull back 40% plus from its all-time high. It will set a 3-month high or low at some point. The timing is the tricky part. SMH, long term. Let's go to the yearly chart. And I look at this and say, well, since the 2008 low, we are up 5,000%. That is not sustainable. 5,000. We went up 5,500% in 16 years. We will see long-term consolidation in all these charts that went straight up. Not yet. But let's see if NVDA confirms a daily rising wedge for SMH to set the monthly lower high and tighten up in a monthly equilibrium. So where is semiconductor money going? We know the broader market's still chugging along higher, while semis are not, so that money's going somewhere. IWM. So here's IWM monthly time frame, where we just had a wall of resistance that we broke out over, and here we are in blue sky breakout at all-time highs. Many times you get the back test. So here's a very clear resistance zone. Look at the daily here. Look at this perfection. So here's reject, reject, and then you go back and it was reject and the all-time high back there. We just had the breakout on the election reaction, a big retracement right to that previous resistance now support into the trampoline bounce right back towards testing that all-time high. And just a note, it's the all-time high adjusted for the dividend. If you unadjust, we're still a couple dollars away. But watch for that back test of major zones. Silver did it as well. Look at silver. Silver monthly, sideways forever range. We know volatility is coming when this breaks. The bull break occurs on the break of this zone. Nice initial follow through. You know, that zone is essentially 26 to 27. So you get 16%. But look at this back test. And again, are there any red flags on that consolidation? No. Higher low right off EMA 12. And you align it with the previous resistance now support as well to give even further conviction. And then you get another 20% move up. So keep an eye on the longer term. Even Jets, Jets went straight up, but if we get some consolidation, let's see if bulls are able to hold this resistance zone. Reject, reject, reject. On weekly consolidation, which has now begun, do we hold this zone for a healthy higher low? All right, let's summarize real quick. Number one, bulls are still in complete control. There are things that I'm watching for in the future over the coming few months into the start of 2025. I would love to see one more dumb leg up where it's just, if you give me another 10% move higher in the S&P 500 and NASDAQ over the next couple months, then my conviction of a blow off top will probably double. But in the meantime, we have long-term patterns that we can be keeping an eye on. We zoom in and we look for the shorter term patterns that increase or decrease probabilities that the longer term most likely scenario is shaping up. And that's how we structure our trades. So let's see if the markets can stay strong enough for Tesla to head to all-time highs after its equilibrium bull break. Let's see if NVDA is a daily rising wedge for an SMH monthly lower high. Let's see if the healthcare sector ends up a long-term head and shoulders for yearly consolidation. I appreciate you watching. Thanks for any likes and shares.